Good morning, everyone. Welcome to the European crossover webinar. And we are seeing some German data that just came out. German engineering orders drops by 17% year over year. Bear with me one moment. So we can pull this in. Interesting, because that just came out right across the wires. Yeah, German engineering orders drops by 17% year over year in August domestic orders. But looking here at the euro, we are holding just right, barely just above that key 967. Let's go and move into that quickly. Right here. And everything is obviously big NFP day. We have gone and see the peso go and pull back further. Actually, all the way back down here to this 1960. After we had a pretty good run all the way up to here, almost to tick off right at 1987. And we've had a pretty good little pullback since then, coming to some key value support here. And of course, the yen still remains under pressure. And crude oil is 52.87, almost knocking at the door of that 53. So let's just go on and quickly move into the news. So this is the dollar skid after weak U.S. services data. The dollar fell to a 4-week low against the yen and a 1-week trough versus the euro on Thursday as investors fretted that weakness in both the U.S. manufacturing and service sectors signals a slowdown in the world's largest economy. Expectations that the U.S. would continue to outperform other major economies and put pressure on the Federal Reserve to slow its interest rate cutting cycle were dampened this week after weak manufacturing and service sectors surveys. Data on Thursday showed the Institute of Supply Management Services sector fell to 52.6 in September from 56.4 the previous month. Last month's index was the lowest in 3 years amid rising concerns about tariffs. The survey's employment index fell also to 50.4 from 53 in August, and September's was the weakest since February of 2014. Hence why people are looking for a very weak number coming out of non-farm payroll. I just don't know if after all the excitement, it'll have to be a huge miss in order for us to make significant moves. Now, the euro will be one thing because I can see the dollar pulling back, but still, even with other pairs, like even with the dollar yen, we'll have to see a very significant pullback. But we shall see where it'll keep the, we'll see a lot of pressure coming in for equities. It's clear the trend with most of the major U.S. data points are trending lower, and it seems the slowdown concerns have been confirmed, said Edward Moya, with analysts with Oanda in New York. While the service sector is still adding jobs, it's very apparent that we are no longer adding jobs at a strong pace, and we'll likely see further weakness in the service sector have a strong ripple effect in the coming months. In afternoon trading, the dollar was down 0.3 against the yen at 106.88, falling to its lowest level in 4 weeks. The dollar index fell to 96.86, Investors now wait Friday's employment report to confirm or quell recession fears. Rate futures have factored in another 25 basis point easing at the upcoming Federal Reserve policy meeting this month, following the manufacturing and service data weakness. Chances of a rate cut jumped to nearly 92.5% on Thursday from 77 on Wednesday. It's increasingly difficult for the hawkish members of the Fed to agree or argue that we're seeing as a transitory disruption of the survey data, said Ranko Barrett with Monex. Yeah, let's move on. Analysts agreed to the long-term Aussie forecast on dovish RBA and New Zealand dollar seen as slipping. Analysts trimmed their long-term forecast for the Australian dollar. A Reuters poll showed the median forecast fell from 69 from 70 a month ago. Most respondents to the survey came in before the RBA widely expected quarter rate point cut on Tuesday, its third such move this year. Financial futures are now pricing an 80% chance of a fourth cut by Christmas, after the RBA said it was prepared to do more to reinvigorate a slowing domestic economy. With rates approaching near zero levels and the government reluctant to boost spending, analysts expect the central bank to do the heavy lifting on policy, with many even speculating the likelihood of a quantitative easing. Fiscal stimulus would be ideal, though there's plenty of capacity, but the government is so far sticking to its 2019 election campaign promise to deliver surpluses. Without a fiscal lift, what we described back in March as the what if QE down under is looking increasingly likely. New homes are still endemically low, with some economists expecting construction-related job losses. The median three-month poll forecast for the Kiwi is at around 63, but lower than 64 in the previous poll of expectations. The New Zealand's economy has been plagued by poor business sentiment for several months now, which is one of the reasons that RBNZ surprised investors by chopping the official rate cut cash rate by larger than expected 50 basis points in August. And with that, let's go on and move into the main screen. So looking ahead for non-farm payroll today, the previous month was 130,000, and they're looking for 145,000. So that's on that's the key headline number. Average hourly earnings, which was pretty stout last time, was 4/10. If this would have dropped to 2/10, and they're expecting 3/10, boy, that'd be huge. But they're expecting 3/10. We do have Canadian export data and IVPMI at 10 a.m. Eastern. But that'll be the big driver then. Let's see here. Because after that, we don't have any further U.S. data. So that'll be the big driver. Right? I mean, not that wouldn't be the big driver, but there won't be like a follow through. Let's say, okay, we can also have University of Michigan at 10 a.m. Eastern. It's just going to be just that, and that's it. And then, of course, we have Canadian import-export. But later on at 10 a.m. Eastern, we will have IVPMI. So it says the euro pushed higher, but is yet to close above 967. Resistance going into non-farm payroll is going to be 1020 with support at 915. So today is obviously on a big day without a non-farm payroll and potentially some big moves. We open up our ranges, and our ranges, this is going to be the key, 1020. You can even see right here with this downtrend line here. So it's going to be 1020 is going to be the key number right here for them to go on and get above That's where we're really going to see the big difference. If we can get beyond 20, really, it really sets the stage for a lot of other movements. You can make the case, well, if we get a big surprise, maybe from there we're going to move to 1075. All that'll come into place if we're able to secure a close above 1020. So that's going to be the key. Can we maintain that area here? So it's going to be 1020. And on the downside, if we go and see a pretty good surprise, I've marked off 1015, 915. You can see here if you look at this daily close, but we're coming up with that 915 right here off of the 2 hour. Right there. There. Let's move into the cable. The cable rose above key level 2346 on a steady run, taking out stops for 70 pips before sliding back. Now from payroll, key resistance is actually going to be 2341, with support at 2248. You can see right here. This is going to be it right here. Actually, see even higher right there. Now I was looking at the 2 hour chart, which is you can see where we'd broken above here. Gusa stops. Before sliding right back into the zone here. And I think we moved it because it was actually lower here, but it's actually going to be 2341. And I think when we look on the daily, it's actually just a little bit higher here. Let me go back here. It's 2355. And let's look here on the 2 hour. There it is. And I apologize. It's going to actually be right there. 2380. 2380 on the upside. And 2248. This is the Aussie dollar started the 38% retracement of 65.72 following the retail sales, which came in slightly worse than expected. Hang on one moment. right here. And still the key thing right here with the Aussie is going to be right here at 68 cents even. Bear with me. And support is going to be back down here at 66.70. And let's go move into the Kiwi. Says Kiwi continues to edge a bit higher on non-farm payroll. The resistance is going to be 63.58, where downside support remains continuously at 62.08. So it's going to be 63.58. We're just gently moving a little bit higher. So it's going to be 63.58. And the dollar CAD continues to keep to the upside pressure. NFP day is all going to be about the daily close above 33.36 and whether we can do that. And that would open a move to 35. Support comes in at 32.88. So this is going to be the key. Can we get this close above 33.36? We do have our resistance right now is going to be at 33.82, but the key is all about whether we can secure this close above 33.36. And you can see here, we're still trading with it. We're just trading the upper part of this range. Until we can bid above 33.36, I'm still going to say, although if you looked over the last couple of days, you would think, no, heck no, this is bullish. But look, we're just still in this range, and we look like we're going to drop out. We're now with the upper part of the range, but really it's all about getting whether we can get this close above 33.36. That's going to be the key. With support, as I mentioned, 32.88. And we'll move into the dollar peso. Says the dollar peso has paired back in line with expectations. Support will be 1956 on NFP day with major bids at 1947. You can see here's that 1956. On the 2-hour, we have some good support that came in at 60, and we're just below that. But you can see here 1956 coming across the board on the daily. And let's go into the 2-hour for resistance. We'll just go with 1970 for right now. 1970. We'll get a little bit of benefit of doubt in case we do get. It's already had a pretty decent little pullback. And with that, let's go move into the dollar yen. Says dollar yen has made the most of the turnaround with the help of a sagging equities. Be wary as NFP day number. I believe it'll have to be a dog with fleas to push price to new significant lows. Watch for good bids to come in at 618. And that's if we do get that strong number, but we've already had a pretty decent little pullback here. Not that we don't expect further lows, and I think we will, but for today, once again, I would be just a little bit cautious because we've already have come off so much in equities, and the dollar yen has benefited a great deal as a safe haven currency. How much further can we go on and fall? We're off our lows right now. We're at 2906 in S&P cash. It's probably 2908 around the futures, but and the low was below 2860. So we're off more than 50. We're 50 handles off the low. So how much further can we drag here? Now, if we get a surprise number, I did say 618, and I would expect a lot of bids to come in. But once again, this is unless the number is really bad, we could really see more of a relief bounce. I think we are going to see very good volatility today, though. I'm really hesitant to put it down that low because you can see here this number support coming right across right there, which basically caught the lows. You can see that right there. That's key. That's 653. Let's take a look at the 2-hour. That was right at the 50% too. There's a lot of good volume coming in right there, 638 too. Well, we're going to go with 634. I'll go with 634 on here. But we're really stretching it down here to get down here. Go with 634. But once again, be wary. It's going to be a pretty bad number. We've already come off quite a bit. Not that we can't dip, but boy, I tell you what, you better have your bids down there to cover if you're short, especially if you came in very late to the party. On the upside, let's go right there, 729. Did mention 739, but I'm looking on the 2-hour. Let's go move into the cash dollar index. Says the dollar index for non-farm payroll today is going to be about extreme levels. Looking at a great reaction at 98.14 on the low side and 99.23 to the upside. 99.23 probably sounds like a pipe dream, but you can see it right here. Right there. Now I'm looking at the daily at 99.23. Yeah, I guess we'll tighten it up a bit here, which right there would be 23 right there. So if we get a surprise and things swing all the way, I doubt that's going to happen. But you have to factor that in. Where would it, if for some reason we saw some crazy anomaly and we actually saw it come in like at 175, and that's not that much of a strength, but it would surprise the market. We'd swing back, then you could see a swing to come in, and you look at those extremes that we talked about. So it'll be 99.23. And on the downside, well, this has really come off quite a bit. Now, you can see here we've been trading in this zone, 98.58. And 98.14. This is if the wheels really come off the caboose. But you can already see that's going to be a pretty good fall here. If we were to come down here to 30, we could see this market continue to keep coming off. There'll be some good demand, but I wouldn't be surprised if we see this market still plow a little bit through it. But here's the bottom of that zone. So that's why I'm going with this 98.14 here. It's a bit of an extreme, but once again, if you see it market come down towards there, the market would really be overdone. We can see the thing push back. We'll see what happens, but let's go on. Once again, it's all, as I indicated in the notes, it's all about the extremes. Let's move into the Kiwi Yen. And boy, we're seeing this thing turn around. This Kiwi Yen. Let's get to there. Sorry about that, folks. So look, we've really seen a turnaround here in the Kiwi Yen. And you can see here, really at the end of last week, we were up in here thinking, boy, we're ready to push low, and this thing really came off. We're actually starting to come back again, and we're right up here at right here at this resistance level. That is going to be resistance. So it's just going to have to prove itself right now at this point. So resistance is going to remain the same, 67.59. With support, we are able to move the support right to there. So let's go and move this. And support now will be 67.16. And let's go move into the Euro Yen. All right, doggone it. Where's a mouse? Doggone it. This we can. No patience. Fed up with being sick. A moment. Let's take a look where we stand here with the Euro Yen. And we're sliding back here towards these lows here on the Euro Yen. Let's take a little bit closer look here. Well, that's going to be having to do is going to can't even talk right. It's going to depend. A lot is going to depend on what is going to happen potentially with equities. Because if we do see equities come off even further or garner um, more momentum, kind of hard to believe after the huge fall we've seen. It's not like as if people be like shocked and saying, "Oh my God, are we going to finish it with all these lows on a Friday?" I mean, once again, the number is going to have to be surprisingly weak for us to really make another push for lows. I mean, because we've really come off. And don't forget, as Blake's been talking about, this next week we're going to have U.S. and China talks, and that's certainly going to be considered for the potential for them to strike a deal. And boy, but Trump has given everything he can to try and put the grease the skids on that for potentially having a deal. So that's why, once again, if you're short, be wary. I'm talking about for dollar yen. I just in turn the equities also to an extent because once again we do have the potential for good news next week. So who's going to try and keep on selling? And those that are short uh, will probably look to go on and cover on any dips because we've already had a very nice little rally. So they'll probably look. So why I think the equities making new lows would be pretty tough. And what I'm thinking is you got to be careful if you're with dollar yen. That being said, obviously this is a yen cross. So and potentially the euro could strengthen if we do get a weaker number. Now that's euro versus a dollar. So uh, kind of question how much further this can push. We are in support. That's going to be right there. 17. You see right here? This little cluster. I'll try and pull this up. You see right there? And that's going to come in right there at 1702. I'll even draw a little line here. There's We're almost there. I'm saying when I say almost there, yeah, from there, but I'm saying is I don't see much of a fall beyond that, but we shall see. Anything's possible, but that's gonna be the support here. There we go. 1702. Just below it. Now look at on the upside. Yeah, it's going to be right there, 1766. So the upside be 1766. Let's remove this. No, on it. I don't know why this doggone mouse is so sensitive. Okay, it's going to move on to the Euro Aussie. We did lower to here. I'm liking this number here. 62.26. And on the upside, right there, 63.08 on the upside. I remember Amanda made a reference to this yesterday afternoon. I was kidding about this thing has just been drip, 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 and you can see it right here. I think she's short And I was like, wow, look at that thing. I go, it's just drip, drip, drip. And that's what it's been. It's been steady lower. Um, I would not have the discipline to continue to stay short in a market that just doesn't move. But hey, look, it's still continuing to move lower. Just once again, each day drip, drip, drip. But 6309 will be buy strong resistance. See, I'm so tired of sleeping. You can't get better if you don't get sleep. But I'm just had my fill of sleep, sleep, sleep. Let's go move into the Aussie Yen. Bear with me. Uh, so we're coming off of these lows. I'm actually going to move this. And that's within reason because considering, it's amazing. The Aussie Yen used to track equity so wonderfully. I mean, you use it basically as a proxy, and those days have long been gone. I mean, look at this rally we've seen in equities off of the lows of the move was really what 50 handles, or maybe a little over 50 handles. And look at this. What a pathetic move. Oh my goodness gracious. Look at that. Those days when they think they just swing like crazy. Um, Resistance on the upside. We're actually going to give it a little bit of benefit of the doubt here. And it's going to be right there. 72.39. And the downside, 71.75. Oh my goodness. Let's go move into the guppy. And keep it simple, it's going to be right there. 31.33. The resistance. Keeping it very simple. 37. 37. What am I talking about? Are you kidding me? 32.42. This pair hasn't seen 37 in quite some time. I was just saying the South, haven't seen that in a coon's age. Raccoon. And let's go into the starting odd. It's going to stay right here. So it's going to be 82.38. We'll go with the 36. That's fine. And upside. Same thing here, 83.73 on the upside. Let's go and take a look at the of the markets. Looking at the crude on the daily doesn't do it much justice. We have seen a very nice run back. I haven't even done that much with crude. I mean, I did catch a couple little scalps, but my focus has been a little bit more on gold and these. Well, this daily news too. I don't really do this market justice because you really don't see. We talked about this earlier. The way this week has gone by. And we actually need to move this here. I talked about this being a bind. I thought we'd get a rally. And this market even slipped quite a bit, but we ended up getting a more sustained rally. And then we took it even higher because I said, hey, look, the potential is if we were to get this weakness in equities, which we did. And then we saw that rally. And we saw that rally yesterday. It came off it. And it was kind of silly because I thought to myself, like I said, I've been having to catch so much sleep, but I thought, why don't you just get long? And if you're really expecting it to go to 1527-30 or slash 34, 1534 in the D's futures, instead of just wait, why don't you just get long? And then I thought the move may happen today. It actually happened yesterday. Obviously, the wheels fell off the caboose early, but we saw that, and then I jumped in and caught a little bit on the short side, and then caught just a little bit more. But then we still came off a decent amount, and just left some money missed. I guess you'd call it opportunity cost, really, should say. And then being sick, I've kind of missed a lot of this move. I caught a few little bit. Actually got stopped on a position, I think about 2 days ago here on the crude oil. But I jumped in a couple times on some scalps. But that being said, let's go and take a look at this on the, I think we'll see a little bit better, closer look if we look at it in the more shorter term time frame. Let's keep an eye on real quick on this SPOOs. Boy, we get a nice little hammer and a nice follow-up on that too. Let's go and move into that to the shorter time frame. So this was referring to here. And boy, has it been, look, but we have reached a very key level. See, that's what I'm saying. I've been sleeping so much. It's the only way I can get better. I feel a little bit better, but then, like I said, I keep coughing so much that the next morning I feel lousy. But I don't have a fever anymore. I'm not going to focus on that. But I'm saying is I just saw this right here just now in the sense that look back up to this key pink line here, and you can see the market kind of stalled. Not a whole lot, though. So I'm not going to say the market came off a whole bunch, which it hasn't. But you can see here, it's been a steady progression back. This market was been so oversold, and you could not buy a bid, and you just kept breaking lower and lower. And then we finally turned things around. It's been just punched a little bit harder. But probably there may be some people that may be short that are a little bit underwater right now, probably using any dips back here. But we've certainly had a nice little recovery off of that. Looking here with the gold. This is one of the things I talked about. Let's see here. Let's go this to 30 minutes. You have to get ready for non-farm payroll and clean up some of these lines too. I'll leave that here for now. But anyway, that being said, so my thoughts on this, and we know that was trading at a $7 premium to the D's futures, or D's is trading $7 premium. So I was looking for a move. I posted on 1527 to 1534. In the D's futures, this is a spot. So that would translate to 27 here, 1527. My thoughts, I think I mentioned this on the daily wrap up. I don't think if we do make a high, which we can, I think it'll be like boop boop like that. Like it just jump up and then it's gone. You see what I'm saying? But once again, my concerns are, and that's what kind of upset me. I should have just gone long, and I actually was going to put in a bid here, and it didn't quite make it. When it got to, and I did miss when it got down there, but we never made it to it, which was to go to 14.98 even on the spot. We came close. I thought, you know what, when it started to slide back, I thought, you know what, then just maybe put a bid under there. But then when you did see this big jump up in here, look, anybody that may be long, I think they're going to use those opportunities to get out. That's what I'm thinking, that we can see this jump up and then fall right back in the range. So once again, you're betting on the number now. And I think the fireworks have already gone off on this. Not that we can't move a little bit higher, but once again, the number would have to be absolutely abysmal. And don't forget, look where interest rates are. The 10 years, although it's even been a little bit lower, but the 10 years at 152.6, we've been as low as 151. But once again, it's still very much low. It's lower than the most recent lows, although we've been as low as 151. I think it was 151. Let me see, it's 151. Yeah, 151.1. So if this thing really wanted to take off, this thing should already be up in here. So that's what I'm saying, is I think you've already missed the fireworks. If it jumps up in here, just get an opportunity for some people that are still stuck long to get out, I think. And then you can see this kind of thing fall back, and then we may see this market kind of ease back as we move in towards next week. So fireworks are already over on this, unless you want to play a real quick play on the number. I guess it wouldn't be a bad idea if you want to be long. I wouldn't be interested in it myself at all. I'll probably look maybe towards the crude oil market or even S&Ps. I really don't want to do anything with gold now. I think I did make a couple of nickels yesterday, but I think you've missed opportunities now. Although I know one of the guys in the room was long gold, because when I mentioned it also the day before, not only yesterday, but the day before, I mentioned I thought he was going to get that jump, and I don't remember who it was. He said, "Wow, that's good news for me to hear because I'm long." So I'm sure he must have gone and taken the opportunity, got out yesterday at those prices. But we shall see. But I think you'll probably see a little bit more movement here in the SPOOs. I think the real play, I think, to me, and I'll move back here. Let me move back to that. Is going to be in the currency markets, and particularly the euro. If the dollar does pare back, really opens the door for the euro to challenge that 10.20, maybe we even push beyond that. And we've seen some nice moves in cable, all about CAD. Yeah, we may go on and punch up to 33.82. Probably see some good volatility. Pace will be interesting. I'd be very, very careful with dollar yen. So other than that, my focus will be more towards the currency. I think the July the 4th fireworks have already gone off in the gold market. So unless you're stuck in a position or something like that, I just think a jump up, it's going to probably be quickly faded back. Not a whole lot, but and we'll see what happens with crude oil. That's all we have. Good luck with everybody on NFP Day, and thanks for joining here on the European Crossover webinar.